Hey, what's going on, guys? Today I'm going to be giving you all a guide on the stock market for beginners and how to trade stocks. This video is intended for any beginner at any level to get a basic understanding of how the stock market works. So let's go ahead and get straight into it. A stock is a security/investment that represents the partial ownership of a company. When you purchase a company's stock, you are purchasing a very small piece of that company, which is called a share. When you purchase shares of a company, aka the company's stock, you are now a shareholder of that company. When looking at stocks, it's definitely important to understand why they go up and down. The price of a stock is determined by supply and demand, meaning if more people are buying a stock than selling it, then the price of that stock will go higher. And if more people are selling a stock than buying it, then the price of that stock will go lower. In most cases, stocks move up and down based on what's called a catalyst. A catalyst is an event, decision, or pretty much anything that can either positively or negatively impact the price of a stock. Examples include a company being bought out, earnings report, and many other things that can lead to a massive change in a stock's current price. There are several ways to buy a stock, with the most common one being what's known as an online brokerage. Examples include Robinhood, Fidelity Investments, Webull, SoFi, Vanguard, Charles Schwab, and TD Ameritrade. These brokerages generally allow you to buy and sell stocks on your computer or iPhone and provide many tools to help you succeed. Overall, there are three main types of stock market traders: investors, day traders, and swing traders. An investor is a person who buys a stock and holds it for the long term as the value of that stock appreciates over time. A day trader is a person who buys and sells a stock in the same trading day. Day traders normally use technical analysis to be successful and generally make money daily off of the short-term price action of a stock. A swing trader is a person who generally buys a stock and then holds it for a few days or weeks in order to profit from an upcoming catalyst or their overall anticipation that the stock will move higher soon. There are also scalp traders as well, but I definitely would not recommend trading that way if you are a beginner. Now we're going to go over stock market trading hours. Regular trading hours for the stock market are 9:30 a.m. to 4:00 p.m. Eastern Time on weekdays. The stock market is closed on weekends and some holidays as well. There is also a period where the stock market is open before the actual market open. This is known as pre-market hours. Pre-market hours in stocks start at 4 a.m. Eastern Time and end at 9 a.m. Eastern Time. There is also after-hours trading as well, which takes place from 4:00 p.m. Eastern Time, right when the market closes, to 8:00 p.m. Eastern Time. Now I'm going to go over a few terms that I personally believe every stock investor should know. A bear market is a market that overall is falling or trending lower. This normally happens during a recession or world-changing crisis. A bull market is a market that overall is going up or trending higher. An index measures the performance of a group of assets, in this case stocks. The NASDAQ, S&P 500, and Dow Jones are some of the most widely known indexes and are a great way to determine how the overall market is doing. Volatility refers to a stock or asset that has intense fluctuations in its price movement. For example, Tesla was $760 in April. Then it fell all the way down to about $560 in May. And now in August, it's currently back at $700 a share. Tesla will be a perfect example of a volatile stock. An initial public offering, most commonly referred to as an IPO, is when a company decides to go public via the process of issuing shares to the public market. Volume refers to the total number of shares being traded on the entire market during a specific period of time. A balance sheet is a statement showing what a company owns by reporting on its assets and liabilities, as well as the outstanding shareholders' equity. Blue chip stocks are companies that generally have a good history of good earnings and have been doing very well for a long time. Examples include Apple, Disney, Walmart, Starbucks, McDonald's, and many more. Market cap is the total value of a company in the stock market. To find the market capitalization of a publicly traded company, simply multiply the total number of shares outstanding for that company by the price of the shares. Earnings report is a document that gives investors a look into the overall financial position of the company. These reports are generally released every 3 months and are also referred to as a 10-Q form. A 10-K is an annual financial report that every public company in the stock market has to file. In it, you'll find a full explanation of the company as well as financial numbers and many other useful things to know about the business. A ticker symbol is an abbreviated symbol that helps investors find or identify specific stocks. For example, the ticker symbol for Tesla is TSLA. A market order is a type of order that allows an investor to buy or sell a stock immediately at whatever price is currently trading at during market hours. A limit order is an order that allows an investor to buy or sell a stock at a specific price. Averaging down is when the price of a stock drops lower and you purchase additional shares of an investment you already own, but this time at a lower price in order to bring down your average cost in that asset. Risk tolerance is the amount of risk a stock market investor is willing to accept when investing in stocks. It's always extremely important to make sure you keep your risk very low as a beginner and only put money into the stock market you either don't need or are willing to lose. For example, let's say I'm new to investing and decided to start today. Now let's say, after looking at my monthly income and overall bills, I've decided that I can afford to put in $1,000. The reason I've decided on $1,000 is because that $1,000 is money that I have determined would not impact my financial situation much if I were to lose it all. Now that number might be different for you. And what I will say to that is, even if you can only afford to lose $20, having some money invested is better than having no money invested. The goal is to make your money work for you and build worth over time. Overall, the best advice I can give is to learn as much as you can and make sure you fully understand stocks before jumping right in and getting started. Index funds are great to invest in if you're a beginner. And ultimately, you can make a lot of money through investing by making smart decisions and just having patience. Thanks so much for watching my Stocks for Beginners guide. If you enjoyed the content, be sure to leave a like and subscribe to the channel. Thanks for watching, and I'll see you guys in the next video.